Do you think you need 20% down to buy a house? You're not alone, but it's a total myth. In fact, there's a lot of myths that keep people stuck. Let's break down the top five so you don't miss out on buying a home. I'm Erica. I'm in my seventh year, and I help people buy houses all over the Twin Cities metro. I'm going to bring Molly Zimmerman on from Bell Bank Mortgage to talk about these home myths. And then at the end of the video, we will do a 1 minute market update for the Twin Cities area. I'll bring Molly on right now. All right, so to get started, Molly, the most common misconception, even after all these years, is do you need 20% down?
That is a question I feel like I get a lot. That is not the case. I think people are actually shocked to find out that conventional, you might be able to go as little as 3% down. FHA is 3.5% down. And there also are the possibility of adding, programs with assistance if you qualify, where you might be able to purchase a property with as little as 1,000 out of pocket. So 20% down is not necessary. And I would say the majority of buyers, especially first-time buyers right now, are not putting 20% down.
Yeah, no, I don't see that very much. Maybe on somebody who's like moving up from their first house, or somebody who's like a little bit more cash saved, but I don't think it's very typical from what I see either. And I think another really common question we get is about credit, and people know that credit score is a factor. So, what is kind of good enough, right?
That's another great question. I mean, I think, ideally, if you can be in that 700 plus range, it is going to open up some doors as far as like pricing, private mortgage insurance if you need it. However, like FHA, if you're a 640 or above, your pricing is pretty much the same. So whether you have a 640 score or an 800, the rate pricing kind of is what it is. As far as like how low will some lenders go, I mean, you might hear that lenders have the ability to go as low as 580. Granted, when you are in that lower bracket, you're going to have hits to your rate pricing, hits to your private mortgage insurance, but you don't need perfect credit. I think the bigger thing is just to work with a lender on the forefront so we can see what your credit is. And there might actually be opportunities to get that score up before you're actually ready to buy. That way you get the better deal when you do buy.
Well, absolutely. And then I think, a lot of people have heard the term debt to income, DTI. We understand that how much debt we have compared to how much income we have coming in, matters. So, where's that line? Like, how much debt is too much debt?
That is another really good question. I mean, as a lender, we're going to look at the mortgage payment as a percentage of your monthly gross income. And then we're going to look at all the other debts. So, like a new mortgage payment plus, let's say, car loans, credit cards, student loans as a percentage of your total gross monthly income. Keep in mind, gross income before any taxes are taken out of your paycheck. We might see FHA approvals push to 55% total debt to income. We might see conventional push to close to 50% total debt to income. So the numbers might break down a little bit differently for every buyer that we see as far as like what that means for an approvable mortgage payment. But my coaching is if I'm meeting with clients and they're toying around with the idea of maybe paying off some debt to qualify for a bigger mortgage, I say, let's look at your approval as is for now and maybe hold on to that money because you might need a bigger down payment. You might need to cover closing costs. And worst case, if you have to pay off a debt to qualify for a bigger house, we could do that at the closing table. So I think kind of holding on to cash can be more powerful in some cases than depleting your savings to pay off debt.
Okay, yeah, that makes sense. Okay, so another thing that comes up frequently, and I think this comes from when people get pre-approval letters or they've had them in the past, they take a break. There's and I maybe every bank and lender is different, but is there like a timeline? Like, do I have to buy right away? Like if I talk to a loan officer and he or she says, yeah, you're pre-approved, go house shopping, and then like I don't know, something happens in my life. Like, is it going to expire? Do I have to start over? What's kind of a good rule of thumb on, that expiration component?
So, in terms of a pre approval, you have absolutely zero obligations to purchase once you're pre approved for a loan. I think we've all seen cases where buyers have come in and they're super excited about buying, but maybe there's a job loss or, something might happen within their family and it's just not feasible. So when I do a pre-approval, the credit is good for 120 days, which is great. However, we can keep that application open. So let's say that, maybe you start looking, but then you're taking a break and you want to revisit it 6 months down the road. We don't cancel out that application, nor would I automatically re-pull credit when your credit report expires, but we would just kind of keep in touch. So I've had files where people have applied and we've kept it open for a year without updating a credit report, and just kind of like tweak things as they move through the process of looking at properties. So you do not need to buy right away. You can get pre-approved and you can kind of look casually if that's what's more comfortable for you. At some point we might need to cancel that out and start a new file, but don't feel any pressure just because you have that pre-approval that you're like on this like set timeline to have to purchase a property. So I mean, I think kind of branching off of that too, Erica, is just a lot of times when I have clients who are pre-approved, they're kind of like talking about what is the perfect market, when should I buy? So what do you think about that?
Yeah, that there's no such thing as a perfect time to buy. I think things need to be more dictated by your personal life. Is your lease running out, or like if you're living with a family or friend, are they sort of asking you to leave now? I think some of those factors are going to be more important. I also like in my Smart Buyer book at the end, there's something about the cost of waiting or the cost of saving. And so sometimes people think, oh, in 6 months, I'm going to get a raise, and then this is going to happen, and this is going to happen, and that's going to be a better time for me to buy a house. Not to realize there's other negatives associated. So, for example, I'm working with somebody right now. We were house hunting very seriously, and all of a sudden he said, I need to take a break. And that was fine. There was a lot going on. But in his mind, he really thought like waiting was going to really like actually save him money. There's a lot of misconceptions about that. So make sure you're working with professionals. Yes, the market does go up and down, but a really simple way of explaining this is like, yes, buying in the spring market is the most competitive. The pro is there's more inventory to choose from because sellers are thinking about moving. So there's more houses to choose from. But of course, there's more buyers thinking about moving. So there's that competitive nature. So of course, you could say to yourself, well, then I'll wait till summer. I'll wait till fall or winter. So then the con, of course, is now what is there to buy? If you're not literally not the only person looking to buy a house, but your inventory selection is going to be lower. There's no guarantee it's going to be less expensive. Maybe interest rates went up and the house prices dipped down a little bit. Like, so now we're like breaking even and there was no savings. It was just a perception. So always do things for you. That's extremely important. And timing the market, man, that is an art that nobody has figured out yet.
Well,
So
to branch off of that, I actually
yeah,
read an article that everybody wants the right house at the right price with
yeah.
the best mortgage rate. And just know that that is nearly impossible. I mean, the only time that that might be possible is if we're in a recession or a depression. Otherwise, you might get one or two of those things, but to get all three at the same time,
Yeah.
it's highly unlikely.
No, and we're all going to make compromises. And so I think I shared with you the other day, that's like very similar to what I tell people. You're going to get 2 out of 3. And we just changed instead of the word mortgage, we say budget. Most of us only have so much wiggle room in our budget. Maybe we have that wiggle room, but we don't even want to use it. So what am I sacrificing? And my quick story is like, I do live in Rockford, which is a little bit outside of the metro. So there's a little bit of a sacrifice in terms of more miles on my car, more gas, more wear and tear on my car. But for me, I got a new house and I got more land. And so the house itself for me trumped the location wasn't the most ideal for me at this moment in my life. At that time, it was fine. So we're all going to make these adjustments. And again, budget's probably the hardest one because our budget's our budget. We make what we make at our job, but those other two are variables. They are controllable, and they're definitely something to give thought to before you start your house hunting. Well, to wrap it up so that we're not overextending our time, if you have like more questions for us and you're curious about other things that you might have heard of, I mean, it seems like every day we're talking to people where there's this or the other thing where it's like, well, if we could just talk to people about these things and answer them, it's not about moving the needle forward if that's not what you want. But if there is something lingering, give one of us, oh my God, give one of us a call. I'm going to start over. Give one of us a call. Our calendar link is below, and we'd be happy to answer any questions. We can do coffee, Zoom, whatever your comfort level is. We're happy to meet you where you're at. One question, 20 questions, it doesn't matter. So thanks again for joining us, Molly.
Yeah, thank you. We'd love to connect.
Okay, it's March 19th. We have a big picture view here of the Twin Cities, and there's two important questions that most people want to know, especially if they have a house. What's kind of happening with my home value? Is it going up and down, which I'll show you in a second? And then how long would it take to sell a house if I were to put it on the market right now? Well, for the most part, we are in that peak season of selling a house. And so that might be pretty disappointing if you have been kind of on the fence and you weren't sure when to sell. But of course, houses sell all year round. So as you're looking at the market meter, notice the star is continually just moving to the right of the extreme seller's market. I wouldn't say we're in an extreme seller's market. It's more of a moderate seller's market at 6.78. The days on market is showing around 29. So that makes it look like it's going to take a month to sell. That you got to remember that's an average. So in real life, I would say for most people, it might sell in less than a week if I was just being a little bit more accurate about like what's going to happen to you if you were to list it right now. Because of course, those account for ones that have been on the market for a while. The interest rates have come down a little bit. They were at 7 for a very long time. They've been just hovering a little bit below that point. And then you can see inventory hasn't changed from this time last year. So it's literally at 0, which we don't often see. I'm going to show you one more screen. And so if we look at the Twin Cities at large, we can see the graph is going up. Like it's just kind of a slow and gentle rise of house prices. So this is the average Twin Cities price. I'm not, you know what, I'll even just take out new construction just to give a little bit more accuracy. So this is a February, it's 434. And if we compare that to February of 2023, it's at 410. And if I move it over here to last year at this time, it was 417. So, I'm bringing this up because if you're wondering what's happening to your house value, it's probably going up. You're probably seeing that reflected in your property tax amount. Again, everybody's got a different story. It depends on the condition of the house, etc. And the kind of the last thing I'll share with you is if you're a home buyer, and a lot of times we'll hear people say, oh, I'm going to wait. I'm going to wait for this. I'm going to wait for that. I don't know if there's kind of a hope that the prices are going to change, and I can bump this all the way back quite a bit. But we have seen prices steadily rise since 2012. And so I guess there's a little bit of a dip here, like right after July of 2023. But it's how much of a dip. But for the most part, we've only seen prices go up. Now, I don't have that crystal ball. I can't tell you when this peaks out and when it stops. But it's like if I'm gonna, wait 6 months or I'm gonna wait a year, I suppose what I'm saying is that I would just predict house prices are gonna be even more expensive. So it's just something for you to consider. There is a cost to waiting that people tend to forget. They tend to think that there's some sort of magic bullet in timing the market. That is very, very hard to do. So I'm never going to tell people it's a good time to buy or sell. I think that that's very circumstantial. Of course, like what's going on in your life matters the most. I hope this information was helpful. We try to make this video every Wednesday if we can, and I hope you'll join me again next week, whether you're finding this on Instagram, Facebook, or my YouTube channel. I'm so appreciative when you like and subscribe and share my content with your friends and family. Have a great week.